If you work from home and just tick the 70 per hour box without a second thought, you can easily leave $500 to $1,500 of deductions on the table every year, according to worked examples built on ATO rules and typical household energy and telecoms costs. That is the loop I want to close today. By the end, you will know exactly which of the two ATO methods pays you more and how to prove it if you are ever asked. Here's the number everything hangs on. The ATO fixed rate method lets you claim 70 cents for each hour you work from home in the 2024, 25, and 2025-26 income years, and that rate covers electricity and gas, home and mobile phone, internet, stationery, and computer consumables. It sounds generous, and it is simple, but simple and biggest are not the same thing, and that gap is exactly where the money hides. Before you pick a method, know the stakes. A full-time remote worker on 38 hours a week for 48 weeks logs about 1,924 hours, which under the fixed rate is roughly $1,277 for 2025-26 according to ATO fixed rate figures. But with high bills and a dedicated office, the actual cost method can push that same claim into the $1,700 to $2,000 range. Getting this wrong at a marginal rate of around 32.5%. ATO 2025 is hundreds of dollars of extra tax you never needed to pay. Your first move is a simple hour log because the ATO now requires a record of every hour you work from home for the fixed rate method, not the old 4-week diary estimate, ATO 2025. Set up a spreadsheet or calendar with date, start time, finish time, and total hours, then tally it each week and save it somewhere backed up. At year-end, you multiply your total hours by 0.70 and keep that log as substantiation because without it, the ATO can cut your claim back to a conservative estimate or zero. The second move is to test the actual cost method properly. Gather 12 months of electricity, gas, internet, and phone bills plus stationery receipts. Then measure your home office as a percentage of your total floor area to apportion energy, according to ATO guidance on working from home. For a household with $2,000 of energy, $960 internet, $960 phone, and $200 of stationery, reasonable work use apportionment can lift the deduction well past the fixed rate figure. If your calculated actual cost beats your 70 CE total, that is your method. Let me make this real with Emma, a marketing manager on $95,000 who works from home 3 days a week. Across 48 weeks, that is roughly 104 hours, so her fixed rate claim is about $773 according to ATO fixed rate calculations. But when she runs the actual cost numbers on her energy, internet, phone, and stationery, apportioned by her dedicated office, the total lands between $1,050 and $1,400, several $100 more for the same work. Your third move is one most people miss entirely. Under both methods, you can separately claim decline in value on office assets you paid for yourself, a chair, a monitor, a laptop. Because the fixed rate does not cover them, ATO 2125. List each item with its price and purchase date, flag anything over $300 for depreciation, and let your software or tax agent apply the ATO effective life. For Emma, that first-year equipment deduction alone could sit in the $700 to $1,000 range on top of her running costs. Before I get to the last part, which is the most counterintuitive piece of this, put your two numbers side by side, pick whichever method is larger, and keep the bills and calculations that back it. If this is useful, subscribe. There's a breakdown like this every week. Over a 30-year career, choosing well and remembering equipment can be worth $24,000 to $42,000 of deductions, which at around 32.5% is thousands in tax not overpaid based on ATO deduction rules and typical cost structures. Here's the counterintuitive finale. The most expensive mistake is not choosing the wrong method. It is choosing no records. If you cannot show hours for the fixed rate or bills and apportionment for actual cost, the ATO can disallow your claim entirely and leave you with zero deduction for our full-time remote worker that turns a potential $200 to $2,000 deduction into nothing, which is roughly $390 to $650 more tax for that year at a 32.5% marginal rate. The biggest myth is that the 70C fixed rate covers everything about working from home, so there is no point tracking anything else. In fact, it only covers running costs like energy, phone, internet, and stationery, and you can and should separately claim decline in value on office furniture and equipment. ATO 2025. The other trap is double counting. Never claim a cost your employer already reimbursed, and never estimate hours when the ATO now demands a full record. Let me rapid fire the whole plan. Log every hour, gather 12 months of bills, calculate your actual cost with defensible work use percentages, then compare that against your 70 SOE fixed rate figure, and take the larger one. Finally, catalog every office asset over $300 and depreciate it on top, keeping a clean schedule so your claim survives any ATO review. If this saved you money, do the 10-minute setup this week. A simple hour log and a folder of bills is all it takes to protect hundreds of dollars a year. Next, I'm covering exactly how to depreciate a home office laptop and chair step by step, including the effective life numbers the ATO uses. If you want to catch that, subscribe so you don't miss it.